All right. Chapter 4, completing the accounting cycle, learning objectives, page 151. Number 1, prepare a worksheet. Number 2, prepare closing entries and a post-closing trial balance. Number 3, explain the steps in the accounting cycle and how to prepare correcting entries. And 4, identify the sections of a classified balance sheet. So learning objective 1, preparing a worksheet on page 152. What is a worksheet? Take one and pass it for me. Yeah, so remember at the end of chapter 3, we did a bunch of adjusting entries and we skipped straight to the adjusted trial balance, right? Well, now when we start chapter 4, we see that we kind of jumped a step, right? We skipped some steps, and that was using the worksheet. So we don't go straight to the adjusted trial balance. We actually have a worksheet that helps us get there. It is optional, but I would say it's definitely more common than not. So it's a really good practice to get in the habit of using a worksheet because it's really helpful to see, and you will identify if you put a debit in the credit column really quickly. Okay, so I'm passing blank ones around. But just like the illustration 4-1 on 152, the first 3 columns are what we think of as our trial balance. Right? Account titles, we list them in financial statement order. Then we put our debits in our debit column and our credits in our credit column. And the totals of those 2 columns should equal. Okay, well, when we were writing all of those adjusting entries last chapter, we would be putting them in columns D and E in the adjustment columns, right? All of our debits and all of our credits in those 2 columns should also equal, right? That's one way that we can see if we put a debit in the credit column. And then we would carry those over, right? So, for example, if we were adjusting prepaid insurance and it had a debit balance of $1,000 and we did a credit entry for adjustment of $200, we would subtract that from the original $1,000, and in our adjusted trial balance columns in F and G, we would have an $800 debit balance, right? The original $1,000 debit less the $200 credit would give us a new adjusted balance of $800. Okay, we've already been working on columns A through G. We've been doing the work, we just didn't have a snazzy worksheet for it, like a template or a format. But we've been doing it. It's kind of how this goes, right? We do it and then we learn about it. Okay, for columns H and I, what are we doing? That's the income statement. That's our revenues and our expenses. So any of the accounts that we list in column A that fall under revenues or expenses, we're going to carry over to columns H and I. And then everything else is going to go in columns J and K because they make up our balance sheet and technically our statement of retained earnings, or retained earnings statement. All right, so top of 153, what are the steps in preparing the worksheet? What is number 1? Yeah, we prepare a trial balance. So oftentimes our accounting software will just spit it out. We can just print it, right? If we're actually pulling each number from our ledger accounts, we will go in order and we will list them out. What's step 2?
Enter the adjustments.
Yeah, so we will either have already done the journal entries and now we're just putting them into our worksheet, or we're doing the identification and the recording at the same time we're doing the worksheet. So we might be making them in a journal, like on a journal page, and doing them in our worksheet and in our general journal at the same time. So the example that they give us is that we're doing the adjustments in our worksheet, right? So then we're putting them in both places at the same time. Step 3.
Adjust the trial balance.
Yeah, that's the 1,000 minus the 200 gives us the new 800, right? That's the step where we're carrying over unadjusted plus or minus adjustments equals adjusted trial balance. Okay, illustration 4-2 on page 154 shows us this, right? What is step 4? Yeah, this is where we have to remember which one is a fall under. What financial statement does this account go on? What do you notice in illustration 4-2? What happened in the blue box? The large blue box in the bottom left corner. Yeah, we had to add a bunch of accounts, right? So are they now in financial statement order? No, we lost all of our financial statement order, right? So if we look at our income statement, when we look down at rows 23 through 32, we had to pick out which ones are revenues and expenses, right? We can no longer assume that they are in order. Okay, after we do the income and expenses, that's step 5. What do we do for step 6, or the other half? Balance sheet. You could call it step 6, or you can just say it's all in one step. The balance sheet, right? If it wasn't on our income statement, it's going to be on our balance sheet. Okay, bottom of illustration 4-2, if you look at the bottom of the columns H, I, J, and K, what do you see? What's happening? Yeah, we're finding our net income or our net loss, right? So if column I is greater than column H, so 10,600 and 7740, right? Our income is greater than our expenses. What are we going to have? Are we going to have net income or are we going to have net loss? We're going to have income, right? If all of our revenue, all of our income is greater than all of our expenses, we're going to have net income. That's what that $2,860 represents. That is our net income. That's what's left over of our revenue after we pay all of our expenses. Well, from preparing our financial statements, we know that net income goes from where on the income statement to where? It goes from income statement to statement of retained earnings, right, as part of our retained earnings, and then goes to our balance sheet. So that's what's happening. So if it's a debit, right, net income is a debit in our worksheet, then it's going to be a credit on our balance sheet because it's increasing our equity. Remember when we were really stuck on how income and expenses affected our equity? Here it is. Net income is increasing our equity with a credit. Okay, so the $2,860 is now a credit in our balance sheet columns, and now they equal because we have increased retained earnings by our net income. Questions on this? Yeah.
Why do they add the 7,000 and 2,000 under the income statement?
Why do we add the 7740 and the 2860?
Yeah.
The 2860 is our net income.
But why do they add it?
Because we always have to equal.
Oh, that's just, okay.
Yes. It's our way of checking that when we add the 2860, we get the same number. And when we add it to our retained earnings or our balance sheet column, we have an equal. Yeah, it's more of a check than anything. Because 10,600 is not really going to get us anywhere.
So the 2860 comes from the difference of the two, and you add it back and make sure it's equal.
Yes. Yep. All right, so once we have completed columns H, I, J, and K, we can prepare our financial statements. That is the last step. So page 156, which we've already been doing, are the first three financial statements. Income statement, retained earnings statement, and balance sheet. Top of 157. The completed worksheet is not a substitute for formal financial statements. We would not go through the process of doing a worksheet and then handing them to a bank and saying, here's our financial statements. Doesn't cut it, right? And we definitely don't want them to see all of our adjustments.
Why would we not want them to see that?
Because if we're providing it to a creditor or a lender, that's really not their need. Right? They're wanting to see how we're overall doing. Right. They don't need to see our adjustments, particularly if we're fixing mistakes. Because sometimes our adjustments are fixing mistakes. Yeah. Okay, the next one, a worksheet is not a journal and cannot be used as a basis for posting to ledger accounts. We still need to write it in a journal, right? We may have made adjustments on our worksheet. They still need to become journal entries and get recorded in our general journal. Then we post them to the ledger accounts.
So would you do the worksheet first or the journal first?
See, and that's where I said sometimes the adjustments get done in a ledger first and then they get put on a worksheet. We will normally take the strategy of doing the adjustment on the worksheet and then writing the journal entry. It just depends on the company. All right. Page 157, do it number 1, cover the answer. Let's just take 2 minutes to work through that one.